The following show is intended for mature audiences. Viewer discretion is advised. Welcome to episode 8, season 2 of Coffee with the Johns.
Oh, there it is.
Yeah.
I like it.
I'm a little bit on top of it now, with...
See, I can get here at 7:40 and you still got time to put everything together. You eat half your sandwich, you eat half your...
Look, when we get a bigger studio that you can walk around all the whole setup that we have, then yes.
I'm nimble. I'm nimble as a cat. I can get around this stuff.
You knock down everything. You're as
big
nimble
lug
as
of
a bull in a china shop.
Ferdinand,
yeah. Man, how's everything been?
It's been a good week. I got some good properties, got some good information on some other deals that we're looking to close next week, and looking good. Won't talk about them because they're not officially closed yet. Once they're closed, we can have conversations.
Oh, and then the sad truth about it is, if you talk about a deal that is not quite closed yet, you run the risk of having some shady, douchey wholesaler go behind your back and try to poach that deal from you, and it's happened to us before.
No, happen.
Yeah. So you got to be careful with what you say.
Yeah.
But today we have a lot, some interesting topics that we're going to be covering.
I wouldn't say a lot of topics, some good, interesting topics.
Some really interesting, deep topics that we're going to be getting into, especially in the real estate niche, in the real estate space. And yes, some of them are going to be political in nature because, again, politics drives policies, which drive the market. So,
and Elon Musk.
I didn't
get to him last week. No, we did get a little blip in there of him. So now I got an article from last week I didn't get to, primed ready for this week.
All right, we'll get into that. The main topic, pretty much what we're gonna be covering a lot on is does the Texas real estate market still make sense to invest in? Is it overvalued? Is it overpriced? We're seeing people overpaying for a lot of property. So I have been speaking to investors where they've told me their concerns. Like, does Texas still make sense? Did I miss my opportunity? So we're going to be covering that. We're going to be covering Abbott removing the mandate for masks. And
remember what one of my predictions was in December? That our mask mandate in Texas would go away by April. That was one of my predictions. When you called that, I was like, called it. So I have to go back and listen to what the exact wording was, but I knew it had something about a mask. I don't know if it was national or Texas, but I was like, we have a mask mandate going away by April.
Because you're rarely right, so we'll have to go back and actually listen to it. But we're also we're going to talk about that and its effects and very negative effects on businesses. A lot of business owners are reacting very negatively to this. So we're going to talk about that and what that means. FHFA extends moratoriums again. What a surprise there. And I mean, we have a lot on obviously politics. Obama and Sprucing are starting a
Springsteen.
What did I say?
Bruce Springsteen.
Whatever. It's all together. You know who I'm talking about. Springsteen. Obama and Springsteen are starting a podcast. There's a lot of regulation going on the big tech companies. So we have a lot to get into.
Coming through.
Yeah.
And then there's the question of, is it needed? That's in several of our topics of people questioning like, why are we doing such a large stimulus when we're getting such good economic data coming out? Oh, that's one thing I wanted to check this morning. Jobs report was supposed to come out this morning. I think it comes out like 9, which 6 minutes ago.
Yeah. So there's a lot to cover. As always, if you're finding value and you just love hearing us go back and forth at it, hit that like button and share it with somebody that you feel needs to hear the stuff that we're putting out. A lot of people don't listen to news, which is great. And that's the purpose of this podcast, is that we cover the news that actually will affect you and not all the other nonsense that you see out there. So we appreciate all the love and the sharing and, the likes and stuff. And as always, put any of your questions and comments in the chat. We love seeing a nice, lively chat. We usually have a lot of smart people on here and having some very interesting conversations. So be sure to jump in and check that out.
I got the first topic whenever you're ready.
Go ahead. First topic.
So I just pulled up CNBC to see what the job reports was. And what do you think happened in February? They were this is what they were expecting. They're expecting 210,000 jobs to be added and the unemployment rate to stay unchanged at 6.3%. What do you think happened?
Not that many jobs were added.
379,000 jobs were added and unemployment rate fell to 6.2%. So they missed it by 169,000 jobs, so almost damn near double of the jobs that they were expecting were added. Now Dow futures are jumping 200 points on that news. So
they're jumping on the news.
They're up 200. They were down, like they fell 600 yesterday. It's on a 3-day losing streak. It fell like 600 yesterday, and it fell like 1,000 or several hundred the day before.
Okay.
So like it's been kind of really falling the last several days on talks about inflation, and now a lot of it's driven by this fact that they're wanting to pump this massive stimulus bill through when they're already projecting to have this massive budget deficit this year. And now there's a lot of people coming out and just being like, why do we need this other stimulus bill when you could just open up the economy and people are going to go back to work and the job market's going to recover on its own? So that's something, and I understand what's going on is the fact that they got to get Trump out of the White House. They ran on pumping this massive stimulus bill to give all this unemployment insurance, to give all these checks to everybody, and to do all these massive changes. But now when you look at the economic data, it's why do we need such a massive stimulus bill? So
to keep that going, because the reason the stock market is going up, the reason, the economy, the whole reason why they're even projecting a much higher GDP. And their interest rates, I don't know if you heard, but they did go up. Even for mortgages, we crossed above 3% for the 30-year. So all of this is because of the stimulus. Every time they talk stimulus, every time they talk this, the market gets bullish and all of the things happen.
Well, now it's going the opposite effect. Them talking stimulus is having the negative effect.
But didn't you just say that market jumped?
On the jobs report. But it's been falling because of the stimulus, them talks of the stimulus and the deficit and cause of inflation and the 10-year treasury rising.
Well, I don't know. I mean, to me, I think it might be more because the stimulus is taking so long to actually get pushed through with all the politics, like always. The stimulus is taking forever to go through. Now it's at the Senate. The Senate is like revamping, doing whatever the hell they're going to do with it. Send it back to get reapproved. So it might be the delays on it, but as soon as Biden won and they announced the stimulus and everything kept going up again. And that's when we saw the housing market, the FHFA, they changed their guidance for the real estate market this year. They all changed them, saying that interest rates were probably going to rise a little bit. Now they're above 3%.
Well, that's where, I mean, is the 30-year already at above 3%? I didn't think it
3.2, 3.3.
Did it cross over? I didn't think it had made it over that yet.
Wow, no trust in the business.
2.3.
No?
2.3. I'm looking at it right now.
No, I'm talking about mortgage rates.
Oh, I thought you were saying the 30-year treasury.
No.
Okay.
Mortgage rates.
But there's
real
a lot
estate.
of
Remember, we're in real estate.
Yeah,
but
okay.
the 10-year did go up.
It's at over 1.5, and it's raising an entire percent in the last several months, and that's what's worrying people. Is like as debt gets more expensive, affecting credit cards, car loans, housing, and these companies, these big tech companies that use all that debt to try to change and expand their businesses.
Yeah,
that debt gets more expensive. Now they can't operate as efficiently, and they run into problems.
But also remember that Jerome Powell. Did I get the first name right this time? So Jerome Powell is not changing, but we've been looking at economics all wrong. You know what I mean? The money supply. Stop. That doesn't matter.
There's several articles that I found. So a lot of this one ties into, there will be some real estate, but a lot of it is on what's going on in the current economy. So I have several articles in here that talk about that, of Powell and his new policies that they're only focusing on unemployment, not so much inflation. But
and not even unemployment. They're focusing on employment.
Exactly. And the problem is, reading this, they're saying, well, with these new stimulus packages allowing people to stay unemployed, and essentially I was running the numbers today, here in Texas, somebody can make the equivalent of $45,000 a year on unemployment. Like, those people that are unemployed probably don't make $45,000 a year off unemployment. Now they can get $45,000 a year. They're saying, what's going to be the problem if inflation does start to creep up and unemployment stays low, or employment stays low, because these people are getting such good unemployment benefits. They don't want to go back to the workforce, because that's part of this package, is that they're extending they're boosting the unemployment to $400 a week. and then they are trying to extend it to the end of August. And now somebody can say, I don't feel safe at work because of COVID, and they can choose not to go back to the workforce
Right.
and go on unemployment, which that just blows my mind. But what's going to happen if interest rates do continue to rise, and the Fed does have to rise interest rates, but the employment numbers aren't where they're supposed to be yet because people are choosing to stay unemployed. So that it's a very
Well,
what happens in that scenario.
and again, what the Fed's point was, and what we talked about last week on Coffee with the Johns, was they're changing what all that looks like, because they were saying before, we had a correlation between unemployment and interest rates and all of that. He's like, that doesn't need to be true, meaning that the unemployment rate can essentially drop, but that doesn't necessarily mean that they're going to raise interest rates. They're like he's like, that's old school ways of thinking, like, so he is pretty much saying, like, again, the rules, all these things are changing.
Yeah.
They're no longer going to be using the same metrics that we've used, that we've always, we've looked into. They're looking to change all that just so it fits the narrative, which is what the Fed wants, which is what Janet Yellen wants, which is just more money printing. They want to get more money into the market. They call it stimulation, but it's not stimulating anything, because all the money they drop in the stimulus checks and everything, it's not going back into the market. Savings have gone up on people's.
I have some of that in here. So the first article, we've touched it like 6 times, so we'll just start with it. The U.S. economy is on fire, and it's about to get stoked even more. So, I mean, some of these articles, like, I tried to shorten them down, but there's so much in them that it's like, to get the context, I had to put it all in here. So bear with me.
You had to.
So it says the U.S. economy has roared back to life in 2021, with first quarter growth set to defy even the rosiest expectations as another fresh influx of cash looms. Manufacturing data showed the sector is at its highest growth level since August of 2018. So not just last year. So this is like middle of Trump's tenure, was of August 2018. The Atlanta Federal Reserve, which tracks data in real time to estimate changes in gross domestic product, now is indicating a 10% gain for the first 3 months of the year. So 10% growth in the GDP in just the first quarter. That growth comes on the heels of a report Friday showing that personal income surged 10% in January, thanks largely to 600 stimulus checks from the government. Household wealth increased nearly $2 trillion from the month, while spending rose just 2.4%, or $340 billion. Those numbers, among with a burst of nearly $4 trillion in savings, pointing to an economy not only growing powerfully, but also one that is poised to continue that path through the year. The V-shaped recovery in real GDP will remain V-shaped during the first half of this year and probably through the end of the year. However, it will no longer be a recovery. Beyond Q1, because real GDP will be fully recovering during that quarter, thereafter GDP will in expansion in record high territory. This is where I get like this massive stimulus package when you see all of this data coming in of just gangbuster economic outputs, jobs reports today, blowing it out of the water, blowing out the first quarter GDP, blowing out the savings rate, and now they're going to say, but we need to pump another $2 trillion in the market. I don't see why. Economists previously hadn't expected the 21.5 trillion U.S. economy to regain its pandemic-related losses until at least the second or third quarter of this year, if not later. Another reason where they're saying, well, we need to pump this money in to get to that point. Well, we already crossed the point that you guys were trying to say we needed this money for. So their reasoning behind this is being invalidated by all the data that's coming out.
They're changing that, is what I was saying before, is that what their reasoning is, what their metrics were, they're changing those metrics to suit the narrative. So they want to keep printing and dumping more money into the market. So before, it was low unemployment, and we talked about this last week about how during the Great Recession that we had, the 2008 crash and everything that we had in 2008, that all of the unemployment that caused, all of the loss of mortgages, loss of everything, all the trouble that caused, they did a stimulus of $800 billion, and they didn't do any stimulus checks. Well, they did quantitative easing, but they didn't do any stimulus checks to the public, anything like that. We had much higher unemployments for a much longer time. It took us to 2014 before we went below, I want to say it was 6%, I think it was, unemployment. And that's pretty much where we are now already. Yeah. So they're changing the metrics. They're changing the guides.
Yeah, so the article continues, with strong federal fiscal support and continued progress on vaccination, GDP growth this year could be the strongest we've seen in decades. New York Federal Reserve President John Williams said it in a speech last week, which is crazy. Like the Federal Reserve chairmen are coming out. You got the New York Federal Chair saying that it's going to be strongest we've seen in decades. The Atlanta Fed saying we're going to have a 10% growth. So the article continues, in fact, questions persist about whether the $1.9 trillion spending plan from the Biden administration is necessary, at least to that magnitude. An economy poised to show its fastest annual growth pace since at least 1984 doesn't seem like a very good candidate for more spending at a time when the federal government already is expecting to run a $2.3 trillion budget deficit this year. One of the major weaknesses in the economy right now, despite a drop in the headline unemployment rate from a pandemic high of 14.8 to now 16.2 or 6.2, unemployment in the hospitality sector has fallen by more than 3.8 million from a year ago, and the jobless rate for the industry is stuck at 15.9%, fully 10 percentage points higher than January 2020. My response to that is like, stop. Like those people are hospitality is unemployed. Your restaurants, your bar owners, your hotels. It's because everything is still shut down. You look at California, like there's still 96% of their counties are in the highest tier of lockdowns still to this day. And then you look at what now I think what was the other? Mississippi, Texas, Florida's been without a mask mandate 100% for quite some time. I can't remember another one of the Midwestern states said we are done with this. Business as usual, 100%, all mandates. I think even Connecticut, which is a blue state, is saying we're done with this and they're rolling back their restrictions on it. They haven't pulled back the mask mandate, but they're going 100% with over the next like 4 to 6 weeks as well. So that's one of these things. It's like if you just let these people that area, what you're saying, they're changing the narratives. Like these are the people that need the unemployment. It's like, no, they don't. They just need to go back to work. Like you just need to be able to allow people to go back to work. But it's their, my speculation why they're doing this is they ran on this platform. They can't let this platform die yet because it's what they need to do to come through with their campaign promises. And now they got the whole government under control. So they're not done using this pandemic yet to their advantage to get these things done that they want to use to justify these massive changes and coming through on the promises that.
And that was also my issue when we were talking about it last year, that everybody kept saying, oh, watch, as soon as, the elections is over, the pandemic is going to be over. And, one of my points was, well, if Biden was to get elected, they can't just make it go away, because that was the whole big scare of why he got elected, right? Is because the Republicans undervalued the severity of this crisis, of this pandemic. So they can't just make it go away. Like it's going to take some time. They got to be strategic about it because people are not that stupid.
They need it for their policies.
Well, not just that, but like kind of tying into, Abbott releasing the mask mandate, right? So he made the speech this week that starting Wednesday he's gonna release you being forced to wear a mask. Now he's being slick about it because now he's putting it on the business to be political, where he's making it the business has the right to be what was it?
You're looking for a term?
No. Because he said in here, that you still need to be responsible and understand that the virus is still a threat. It's still an issue. So you as the business owner need to decide whether you're going to ask for masks or not.
Yeah.
To me, that is a very politician kind of thing, and very sleazy from a politician to do, because what I see with that is that you are now taking the responsibility off your shoulders for why businesses cannot allow people to come in, and you're making businesses get political. Because that's what this mask mandate has become. It's very little to do with the virus and a lot more to do with politics. Like, 100%. If you're a business owner and you say, hey, you have to wear a mask, you're pretty much saying, I'm a Democrat, right? To a lot of people, that's what they're saying. And if you say, hey, look, You don't have to wear a mask. You're a Republican. It's been political, right? It's not, well, there's a virus, there's an actual issue going on, there's threat to your health, to whatever it may be. No, it's not about that. Now it's about, what political party are you? And what Abbott did, I think, is a bit of a chicken shit way out of it, because he's flip-flopped a lot during this whole crisis. You know what I mean? Like, Florida has stuck to their guns. That's why I believe Florida's not getting so much shit like Texas is. You know what I mean? Texas is getting a lot of crap from a lot of people.
They removed their mask mandate. Did they implement a mask mandate? I don't remember.
I don't know.
But he also said they were opening up 100% back when the Trump administration was still. So they didn't have control of everything yet to slam Florida. Texas is just the first one to start rolling things back.
But what I'm saying is that they stuck to their guns. Texas could have done that back then.
Yeah.
You know what I mean? They did it. I'm not saying they should have or they should. What I'm saying is the issue that I'm seeing with Abbott is you gotta pick a side. You gotta stay true to you. You know what I'm saying? And like, you keep flip-flopping for the public and for politics. I mean, 2022 is when the re-elections are for governor. He's trying to run. So now we're seeing this whole thing become, again, political. You're going to, you're in Texas. You're going to start seeing this really explode over this year. You have O'Rourke.
Beto
O'Rourke is coming out again. And obviously he's going to probably be one of the people running against Abbott. And they're making this political again. They're making it like, this is so, what did Beto say? He put it, this is a death warrant, and the governor is killing the people of Texas by doing this. Yeah, the San Antonio Spurs coach, Pop, came out and said, pretty mystifying and ignorant. Then who was it? Fort Worth Business Press editorial said, it's official. Greg Abbott is a moron. So you're having all these people coming out against it. They're going to make it political to get him out because they want to, turn Texas more blue than it is. And he's just not sticking to his guns. Like, he's not picking a side. He flip-flops. And now you're releasing it and you're like, oh, now you business owners, now you're giving the business owners a choice. Why didn't you do this before?
I mean, it's because Molly's coming in chat. So is Val. And we had a discussion about this last night. Was just like, it should have always been the business's decision. 100%. Businesses from the very beginning in Texas can choose, just like a person can choose whether they want to wear a mask, and a business can decide whether they want to require people to wear masks in their establishments.
Yeah.
They could have done that from the very beginning, but they didn't want to. So the government had to step in and told everybody they had to do it. Or, well, no, the governor allowed it to happen, allowing the county judges to enforce these mandates and stuff like that.
That's where I'm saying, like, to me is a very, this is a French word I learned, but it's a very bitch way out of it, where it's
Bichon.
Bichon. What the hell?
What are you building for the future?
Yeah, more hypocrisy. But because, again, why didn't the business have the right to choose in the first place, right? You took that right away. And now when it's a climate that's so unstable and everything, it's like, okay, here you go. You choose. Like, wow, great job, Dick. You know what I mean? Like, Now it's on me. Now I'm the one that's going to look terrible. And
well, I mean, to Val's point here, she goes, I just feel bad for employees now because I feel that there will be more confrontations from customers not wanting to abide by business rules just because there's no more mandate. And I know that's one thing HEB came out. It's like, they're strongly encouraging customers to wear masks, but they're not going to require them because of the fear of confrontations, of them trying to enforce those things. Because that's the problem they were having beforehand. Is they were saying, you need to wear masks, and people were like, no, I don't have to. Nothing says I have to. Yeah. And that's where I agree. It does suck for them, but it's also one of the things that it should have been the business decisions from the very beginning. It should have never been the government's job to say, we need to force everyone to wear masks. Like, no, businesses can choose whether they want people to wear masks or not. It's their choice.
So the press secretary came out and said, Texas, I would imagine, the fact is Texas now has the tools and knowledge to combat COVID while also allowing Texans and small businesses to make their own decisions. State mandates are no longer needed. There's people, business owners, and other people saying if businesses are requiring requiring me to wear a mask, then they obviously don't need my money. I can find another store. HEB, for example, never had a mask requirement for its customers, instead deferring to local and state ordinances. Now the state will no longer require masks in public settings. HEB will follow the direction except in areas where masks are mandated by local officials. So again, you're putting it now on the businesses. Businesses are, and this is a question I have for you and for people listening. You own a business that's customer facing, right? That you have a lot of flow of traffic.
Retail.
Yeah, anything.
Retail.
A gym, retail, because the gym that I go to, the Kung Fu gym that I go to, they make us wear a mask while we're doing the training. It's extremely fun. It's a hell of a workout because my heart rate goes way the hell up when you can't breathe.
Well, yeah, when you can't breathe no oxygen. People just passing out everywhere. That's healthy.
Yeah. Oh no, nobody's passing out. But but I also understand in their position as a business owner, it's difficult. It's a difficult choice because, like, if you say, hey, you don't have to wear a mask, then people that are scared about this, because we've spent already a year on this, right? We started last March, the last shutdown.
It was middle, it's right around the beginning of March. So it's been a week or two.
We spent a year on this. So the fear people have is insane. You know what I mean? There are people that are legit terrified of catching COVID. You know what I mean? Like petrified of catching COVID. And then you have your other side that could give two shits about COVID and all of its repercussions or any of that. So what do you do as a business owner? Like, as a business owner, at the end of the day, of course, you want your customers to be safe. You don't want them, blaming your establishment for the reason their mom died, or, you know what I mean? Like, for something severe. But then at the same time, it's like, what do you do? Like, you alienate. Now the government is making you alienate the other side, because it's political. It hasn't been about the virus anymore. So I think this is very dangerous. What would you do as a business? Like, if you're a customer facing business, what would you do? What's the right move for you?
You have to play to your base and your customers. It's your business. You need to decide for you. It's like, what do I want to do? And you have to look at it from, you're in business to make money and make a lifestyle.
Right.
Which one's going to be least impactful to your bottom line and your business, your cash flow, and your lifestyle? Requiring masks, you run the risk of people not coming in. Not requiring masks, you run the risk of people not coming in. So you have to determine which one's a bigger risk to your business and play to that. And being here in Texas, hearing the stories that are coming out of HEB, you kind of got to say it's up to the people what they want to do. Because I think you're going to have more people that are fed up with this. Now, if this was California, I would say the opposite. But being here in Texas, I would say it's kind of hard to force that on customers coming in, because I think there are people that are still the quote unquote true kind of Texan kind of style of just like, no, I don't want to be told what to do.
Yeah.
It's my choice. If I want to wear it, I can wear it. If I don't want to wear it, I don't have to wear it. So that is something that I think you have to do in Texas here. I think it's, as a business owner, it's like, I think it'd be a disservice to your bottom line by trying to force people to wear masks. I think there's other choices that other people can go, and there's enough people saying, you know what, there's enough people that are tired of this crap. I think there's the silent majority that are just like, I'm over it, but the news controls the narrative. Yeah. That if you try to do that, I think there's people like, there's other options. I can go somewhere else. I can take my money and go somewhere else. I think that would happen if somebody tries, like a boutique shop, somebody that's like, I need the foot traffic, but if I'm forcing these people are going to my competitor. They're not like big multinational conglomerates like HEB that's like, you really don't have much else to shop. Where are you going to go? Walmart? Like, I think if HEB forced it, they'd have the confrontations, and they're doing it because of the safety of their employees getting berated and yelled at. But I think if they forced it, they're not going to take that big of a hit. Their people would, because of dealing with the people, but I don't think their bottom line would, because you don't have the options. But if you got a small little retail shop in the Pearl, You could have people that like, I don't want to carry a mask with me anymore. It's over. It's done with. And if they want to require it, I'm not going to go in that store. And they walk right past it because they didn't even have one on them. They want to go into the shop. Can't. Mask. Don't have one. Sorry. I go to the next shop. Because those shops are tiny little boutiques that are very specialty shops that have a unique customer base.
Yeah.
So I think you have to play to your customer base and where you're going to get the most negative effect from. But I think
so here's the other interesting point is when you look at the stats across the country, places that have been more open, like Florida, versus places that haven't, like, you know, California and stuff like that, the numbers are pretty much the same. Like, when you're looking at each state as far as people getting COVID, people getting hospitalized.
So you're saying like you got New York and California versus Texas and Florida, and it's like they're pretty neck and neck.
Yeah, like you look at all the numbers and everything, and they're not, you know, obviously you got to take the proportions of population and all of that, but it's not like you're saying, look, there's drastic evidence on either situation. It's my opinion. Again, guys, this is an opinion. We're not doctors, attorneys, accountants,
engineers, scientists.
Yeah. Okay. These are all opinions. But my opinion on all this is that this virus is not going to be eradicated. You understand? It's going to be like the flu. It's going to be like something that is, you know, are people going to die from it? Yeah, some people will. Most will not. Some will get very sick.
Some people still die from the flu.
Most will not.
Most people don't.
You know, most will recover. Like, it's just going to be, you know, you can't shut down the whole country because of this. And Tony Robbins came out and said this in a video that I was shocked. But, you know, you're Tony Robbins.
One of those you should link below.
Yeah.
It's not like Tony Robbins is a small character either. I mean, he's a big guy, but I mean, he's also $500,000.
He's a motivational speaker and everything. And for him to come out and say this, like, you know, it was very interesting. But he came out and pretty much said that he's like, the same amount of people that died last year, the year before that, have died this year.
Yeah,
like nothing. Like
okay, you kind of said that in a weird way. It's like the same number of people died in 2020 that died in 2019, that died in 2018, 17, 16, 15. Yeah. So 2015 to 2020, the same number of people across the world died.
Yeah. So you didn't let me finish. What I'm saying is, what he said is that, yeah, as long as it makes sense to you. What he was saying is that we switched one group of one reason for people dying for another reason for people dying, but the same amount of people died anyway. You're putting everybody in bubbles, putting everybody in their home, right? And people are dying from depression now, alcohol, drug abuse, suicides. I mean, it's gone nuts in the complete other direction. But none of those things are important. What matters is that you don't catch COVID. That's what matters.
Oh, I was walking through the gym this morning, and they had an article up that said teen suicides on the rise, like drastically, to the point where like people are starting to notice. And they're like, what's causing it? All of a sudden they straight out say it's isolation from their friends and family. It's like they're isolated, they're doing book work, they're by themselves. Like a young child needs to be out and developing and meeting other people, especially if they've been that way as teenagers. Like growing up, they were meeting their friends, they were talking with them, they were used to that camaraderie, that engagement, that feeling of being important and part of a group. And then you shove them in a room, so they make them sit in front of a computer for 5 hours a day doing book work. And it's like they feel inadequate, they feel worthless, and now suicide's on the rate. But like, that's still not checking the narrative. And that's one thing. It's like, I think it's disgusting what politics have done with this disease over the past year, just a year of this route that's going, and they're refusing to let it die, especially when you look at those numbers. Like, to Tony's point where he's like, cancer, what are the two main killers of like in 2019, 18, 17, 15 back? He's like, it was heart disease and cancer. He's like, well, in 2020, heart disease and cancer were drastically down, but COVID was up in an equal proportion of the amount. So it's like you just took cancer and heart rate didn't kill people, but COVID did the exact same amount, but the net same number of people died. That's a very odd stat. And then you combine New York numbers and California numbers versus Texas and Florida, your four biggest contributors of GDP in populous states, and their numbers are equal. Yeah. And they've got two completely different policies against it. And now you got California trying to recall Newsom over his handling of the pandemic.
And difference between their policies, though, is that between California and Texas and all that, is that one, the numbers are the same regardless, because I think the virus needs to go through people anyway. You need to get to that herd immunity point anyways. If there even is immunity, like it's just like the flu, right? Like the flu comes every year. It needs to go through anyway. The difference is that now you're adding to that by destroying people's businesses, destroying people's livelihoods, causing more stress, anxiety. I mean, even just that fear that people have is nuts. You know, that fear that people have about, you know, going out and seeing somebody. Like what I think we're going to see over the next coming weeks, especially in Texas, is we're going to see probably some escalation of tension and everything, because you're going to have these people that now want to make their point that they're not going to wear a mask.
Oh, it's going to be like,
versus the people that want to make their point that you have to wear a mask.
April, May, June last year, we had those tensions really rising before Texas or before Abbott came in and called it. And it's like, you need to wear a mask, you need to wear a mask. No, you don't. No, you don't. And like the tensions were really up there until you kind of got that second wave, third. I lost track of the waves. Yeah. Like whatever that wave was last summer, to where they're like, okay, now we need to come in and put a mask mandate in place.
And that's exactly what it did, right? They came in, they put the mask mandate in place, and it took that pressure off of individuals. It took that pressure off of businesses having to mandate, having to force, having to be political about it. Yeah. Because again, it's become political. It has not become about the virus. And that's where I think it's sad, because if this virus was much more severe than it is, like, we cannot, you're making people be emotional about something that can kill you, right? Like, that's what I find stupid. It's like, it should not be political. It should just be common sense. You understand? Like, if this virus is deadly and it's dangerous, it shouldn't be about, are you a Republican or you're a Democrat? It's like, no.
You wear a mask or not wear a mask.
Exactly. You understand? So, but you look at all that, and that's exactly where it's become. That's exactly what it's become. I don't know if it knocked out my other freaking feed.
For those who know what just happened, John's phone rang, and that's one of our cameras.
Yeah. So you gotta love it. So you're looking at it. They're forcing people. They're putting this on people. They're putting all this stress, all this tension. People don't know what to think. I talk to people that are afraid of COVID and everything, and we talk about numbers. We talk about everything because I want to understand. And they don't have really any facts to back it, except, well, look at the news. Look at the news. And I'm like, well, how about you just stop looking at the news? Because you're just in constant fear with no education. And there's a quote, I guess it's a quote, but Denzel Washington was quoted saying one time, if you don't watch the news, you're uninformed. But if you watch the news, you're misinformed.
Yeah, there you go.
I was like, that's some smart shit.
It's a dangerous position to be in, too. Yeah. It's like, what do you do? But it's also one of the things with this, like, Abbott's going 100%. Like, he made the point. It's like, we aren't changing that much. We were already at 75% across the board. It's like, so
I thought we were in San Antonio, we were at 50.
No, they rolled it back for a little bit, but then they jumped right back up. But you heard them roll it back. But you didn't tell them.
I didn't hear them go back.
No, of course you didn't hear that they're opening things back up. Why would they do that? I would let you know. As like they're opening things back up 100%. So it's just one of those that it's just like, man, they really politicized this and made it something. And
then you put an article in here that says Fed Chairman Colin Powell. Yeah, just come in.
Good.
Oh, the Fed Chairman Powell says economic reopening could cause inflation to pick up temporarily. What I find funny is here. So you guys see the article. Let me move this down a little bit, because if you see that banner at the top, so Fed Chairman Powell says economic reopening could cause inflation to pick up temporarily. And then on the top, it says breaking news. Dow rises more than 200 points as strong job report boosts reopening optimism. So you have the job report, the reopening optimism is making the, everybody more, the Dow go up and everything, but then you have the Colin Powell coming out and say, not Colin, Jerome Powell, the Fed chair, coming out and
Colin
saying
Powell.
reopening could cause inflation to pick up temporarily. So we go back with the misinformation and all of the stuff that's going on. But you want to cover that article that you put?
Yeah, I mean, you kind of got the gist of it of what they're exactly doing. It's like the Federal Reserve, Jerome Powell, said Thursday that he expects some inflation pressures in the time ahead, but they likely won't be enough to spur the central bank to hike interest rates, and that's what's causing the problem. Is like, what are they going to do? And there's a lot of talk about they're going to do kind of a twist because long-term interest rates are rising, but short ones are still low. So they're talking about doing some modifications of policy where they start selling the shorts to buy longs to kind of flatten the yield curve a little more so they don't have this spike in the 10-year, 20 and 30-year treasuries.
And how are they going to do that?
They sell short-term bonds to make the short term rise so they can buy long term. So they don't change their policy because right now they're buying 120 billion a month in treasuries and mortgage-backed securities. So they're not changing the policy. So they want the short-term interest rate to rise, but the long-term to fall, to flatten the yield curve down, because right now it's zero and that long-term curve starting to rise.
Right.
So to flatten it, they sell the short-term treasuries. So when they sell them, that increases interest rates, and they buy the long-term to bring the yield curve down to get it more flat. So that's one thing they're talking about doing. So it's a net. The bond purchasing program doesn't change. It just changes the way it works to kind of flatten the yield curve down if that 10, 20, and 30 year starts to rise at too fast a pace and causing problems. So it's like rising interest rates, he added, would require the economy to be back to full employment and inflation to hit a sustainable level above 2%. He does not expect either one to happen this year. The Fed has reportedly said it will keep short-term rates anchored near zero and continue its monthly bond buying program unless it sees not only a low unemployment rate, but also a job recovery that is inclusive across. This is one thing I kind of got me where I think it's an open to keep things low to keep the gas on. So they say unemployment rate, but also a job recovery that is inclusive across income, gender, and racial lines. That last little piece is like, wait, what? Across income, gender, and racial lines. So if gender and racial unemployments are still high, you're going to keep pumping money into the market to try to target these people, but the Fed does not have direct ability to do those things. They control monetary policy, not fiscal policy.
Says you.
Says the news, but yeah, right. Who knows what they're actually including? But one thing, my speculation on why they're doing this, like all this stuff, is because they realize that there's such a, and nobody's talking about it, but I bet they're talking about it like behind closed doors. They don't want the news to hear about it. Is there's such a massive level of debt in the world that they have to cause inflation. They have to weaken these systems and these currencies to a level to where it wipes away all of this debt to get housing prices through the roof, to pay back, what is it, today's dollars with tomorrow's cheaper dollars?
Right.
Right?
Well, that's one thing that, I've said in previous episodes of why the biggest, the smartest investment and the best investment that you have right now is going to be your mortgage. It's going to be a 30-year mortgage because you're going to get a 30-year fixed mortgage with these low interest rates, and you're going to be paying off this mortgage with cheaper and cheaper dollars.
Well, and it's also
it's going to get to a point where you have a mortgage that's worth so much more because that mortgage is so cheap compared to what the money supply and everything is. And the more they keep dumping, that's why when last week when I read that article, I was reading it and I was just like, holy crap, even though that you and I had spoken about this, like things don't anymore make sense to me about what economics is. But for him to say money supply, that's a thing of the past. Stop thinking about money supply.
Anymore.
It's like, what do you mean don't think about money supply? That you're going to be causing huge asset bubbles. But then at the same time, it's like, are they going to be bubbles? Because why would they pop anymore when they manipulate all the metrics? They manipulate everything.
Well, that's what I think. I think that's what they're trying to do is like they want to create so many bubbles that everything's a bubble to where it's just normal. Like there isn't anything to pop anymore
in a
because
bubble world.
because everything has risen up with it. They've pumped so
They
much
want
money
you to live in a bubble. They want to inflate bubbles.
they erased them. There's no we can call it a bubble, but it's not anymore because they created a new normal by creating so much new money and keeping interest rates so low and creating inflation to go so high and change the metrics of what rates inflation to keep it at that 2% till they like you said, they move one thing out, they put another thing in it, which is I see why they do it because like purchasing moves. So if somebody can't afford $5.99 beef and they see chicken for $3.99, they're going to buy chicken over the beef if they're at the bottom. So that's why they take that out and put the new one in. Everything needs to rise. Yeah. But until they get that low rate up to a point where they erases all of this debt, that it creates so much cash that you have a new normal. There's no longer bubbles because everything has risen. You look at the stock market, you look at commodities, you look at oil, you look at real estate. Every asset class except for, I mean, even bonds went up these last couple of years.
Look at on all the stocks, the PE ratios and everything. Like when I used to invest in stocks and trade stocks and everything, I remember how you would look at PE ratios. You would look at, is a stock overvalued? Is a stock, or is it selling for more than it's really worth? Now it's like, well, yeah, that kind of doesn't matter because before when the PE ratio would hit a certain number, then you would see a sell-off. You would see something happen.
Yeah.
Now that PE ratio just keeps going up, keeps going up, keeps going up, and people keep buying more. And I'm like, huh. And when you look at it, the amount of people jumping in the stock market, more and more unsophisticated people, right? Before you needed to have a level of sophistication to jump into the stock market.
And you needed money to do it too. Because like if you went to an old school brokerage 20 years ago, like it cost you money to get in the market. You made a trade, $5.
Yeah.
So instantly you had to get that much of a return back. And if you were only putting in $100 plus $5, it wasn't worth it.
Well, and now with the apps like Robinhood and all these that are making it cool to invest in the stock market.
Oh,
you understand that it's cool to do this. It's cool to speculate. Just buy more Bitcoin. Oh, look, somebody, Elon Musk tweeted about this. Go buy that. It's become cooler to do it, and the lack of education on fundamentals, on what makes sense, and all of that is just no longer exists. That's why. The conversation that you and I were having was, you went a whole life knowing that 2 + 2 = 4, and now people are saying 2 + 2 = 4. Well, hold on, it depends if it equals 4.
What's the 2 identify
what?
as?
Yeah, what does the 2 identify as? Oh, that was good. That was good. My God, that was funny. What does the 2 identify as? Oh my God. That's the kind of humor that you guys are going to get.
In all real, it's like, they change everything. It's like, well, that number doesn't matter anymore. Like this number now is into this new number. Like, what about the old one? That doesn't matter anymore. It's like they're making the choice to change their narratives and like what they target. So it is something that is interesting. And it leads right into like, what does somebody do? Because like Buffett comes out, Warren Buffett, the Oracle of Omaha. If you guys don't know who he is, I'm sorry.
Oracle of Omaha.
You never heard that?
Yeah, I did. It's just always been so cool.
Because it's like, from Omaha, Nebraska, where it's like it's a flyover state. Like it's Cornhusker. It's nothing but cornfields out in western Nebraska. But the article is called "Buffett Says Never Bet Against America" in a letter noting companies' U.S. assets. So for those of you that don't know, Warren Buffett owns a massive conglomerate. In the article, they talked about like he owns the largest holding of U.S. based physical assets as far as like buildings, railroads, trains, infrastructure, everything. To where he is, I think he was like 157 billion. The next person was AT&T at like 120. So I mean, he's got a lot of assets. So he's 90 years old, which is crazy. But he's also heavily invested in the United States, in flyover states, in old school value add companies. Even though Apple's his biggest holding, he owns BNSF Railroad. He owns a lot of insurance companies. He owns a lot of brick and mortar style businesses. So that's why they're saying he puts out an annual letter every year to all of his CEOs of all the companies that he has, and he says in there, like, in a letter noting his company's U.S. assets. So people are saying, "Wow, well, Buffett anymore? These value adds. Should we bet against Buffett because he's underperformed the last 10 years?" So he says, never bet against America. He said in his letter, he says, and Buffett reminded investors that miracles do occur in Middle America, despite much of the attention to coastal areas. After all, the legend started his conglomerate in Omaha, Nebraska, and its home office remains based in the Cornhusker State. He quotes, success stories abound throughout America. Since our country's birth, individuals with an idea, ambition, often a little piece of just a pittance of capital, have succeeded beyond their dreams by creating something new or by improving the customer experience with something old. And he says, bonds are not the place to be these days. Fixed income investors worldwide, whether pension funds, insurance companies, or retirees, face a bleak future. So it plays to your point that he sees this, that it's like they're pumping so much money in this that bonds are already at a zero low. They're going to let inflation run, and it's going to erode any kind of principal payment that comes from these long-term bonds to generate capital. And he sees that heading for the next decade or more of what's going to happen.
Yeah.
And some of the things he's taken to combat this is that Berkshire bought back another near $9 billion of its own stock in the fourth quarter of 2020, bringing the firm's total repurchase to $24.7 billion last year, a record year for buybacks. The conglomerate still is sitting on a huge cash war chest with more than $138 billion at the end of 2020. So you got the Oracle of Omaha telling people, it's like he sees what's happening with all this money printing, and that's what's kind of not being said that I'm reading is like they want to pump this money in here. So they're making it political, but they want to pump this money in here. They want to get this stuff in the market. They want to erode the dollar. They want to bring asset prices up through the roof to create this new cash to erase the old debt and everything like that and pay back with cheaper dollars. So
you also got to think about, like, they can't, even when you have Ray Dalio and stuff like that he comes out, he's another big investor, and they are invested in the stock market. You understand? Like, it is to their benefit for the stock market to keep going up because the companies, all the businesses they're invested in, and, people always say, Warren Buffett, he buys stocks. No, Warren Buffett doesn't buy stocks. He buys 10, 20% of a business.
Yeah, he buys it through stock, yes, but he buys 20% of all the stock.
Exactly. He has a controlling say in the company. Like, he's not buying common shares like most people are. So they have a vested interest in all this. And then I also believe, like, what it is, as long as the U.S. dollar is still the reserve currency of the world, and China's trying to take that position, but as long as the U.S. is still the reserve currency, I wouldn't bet against the U.S. either, because they control everything. Being the reserve currency, they can print, they can do whatever the hell they want. What else are you going to do? What other option do you have? Mm-hmm. Right? So I agree. I wouldn't bet on the U.S., but at the same time, the instability this is creating is ridiculous. You know what I mean? And this is something that it does worry me, because it's stuff that you look at, all the money printing, you look at everything, you look at, again, all the values of companies being extremely overvalued. It's like, what's this all going to look like? You know? And one of the points I wanted to hit on is, I was just thinking about it this morning as I was driving here. The book, we just read the book by Patrick Bet-David called Your Next 5 Moves. And it made me think of that book, because what I realized, not just with this, but like with everything, people are just no longer strategic. People are no longer thinking more than one move ahead. They're not thinking more than the now. They're not thinking about tomorrow. They're not thinking about, in 5 years from now. They're not thinking about any of that. But you have countries like China that has been for a very long time. They've been very strategic in planning, setting up, getting themselves ready to become the world power. They've been very slowly working their way up year after year, decade after decade. They're very strategic. They have a plan in mind that I believe last I read was 2028 to be the world power.
That long?
Yeah.
I thought it was like 2025 or something. Yeah.
Oh,
it might be,
maybe,
but it's like they are.
But they have a goal in mind that they're going to hit, while we are over here fighting with ourselves over the dumbest things possible. And you have these
Masks. We're fighting
countries,
each other about masks.
and you have these countries that are being strategic. They're thinking so far ahead. But what the problem that we have is the same problem that we had in Argentina. Argentina, like we said before, prior to 2000, it was a world power. Argentina had everything. They had gold, natural resources, oil, agriculture,
coastal,
everything
on the coast.
everything. So they had all the power. But what happened is a president will come in, put in policies, steal some money, then he will leave. The next president comes in, undoes everything the last president did, and they rinse and repeat. So the country never moved forward because every presidential election, every new president, it turned out that they just kept changing whatever it was, changing whatever. So they never build on anything. And the U.S. is doing exactly that. We're going president after president, not building on a damn thing. Because every president that comes in undoes whatever the last one did. They come up with whatever asinine ideas they have of whatever magical world they live in, but they don't really care because all they're thinking about is their next election. That's it. They're not thinking about the country as an overall.
That's why I've always proposed. I'm a large component of like term limits on certain things. Like presidency, you instead of getting 2 4-year terms, you get 1 6-year. So because you look at it, basically your first year, you're trying to change things, get things set up. Your second and third year, you can actually do some things, but your fourth year, you're all running elections trying to get reelected. So your focus is diverted. Yes, they're still running the country, but you can't tell me they're not thinking about what it is that they need to do to get reelected.
Right.
So,
well, and then you have too, like you're saying, they're thinking about all this. They're thinking about their next reelection, and then even after they're done with, let's say, their 2 terms, they're already thinking about the election of the next president, right?
Yeah,
who is the next person that's going to come in power, right? So keep that going.
Let me ask you this question. Like, do you think the U.S. can do anything to prevent China from becoming the world's largest economy?
Not the way we're going. Hell no. I mean, you look at it, if anything, and going back to the next 5 moves, right? I think Trump was doing a lot of good things with, bringing the light to a lot of the shit that China was doing and everything.
The Biden administration has come out and said some of the people he's picked that Trump was right to take on China the way he did.
Yeah.
Except Trump was just very open that he was doing it. He was very vocal, where this administration seems like, this president hasn't even addressed anybody yet. So I think they're saying it's the longest a president has ever gone without addressing Congress in any way. Because I think the latest one was I think it was Obama did it like February 26th of his inauguration. It's like now we're into March and we haven't seen anything on Biden addressing anybody.
Wasn't the State of the Union supposed to be in February?
I don't know. I know, I do know, they cut him off. Like he was addressing the House and they cut the live feed. He says, "Okay, do you want me to ask questions? Or Nancy, do you want me to take questions?" Stuff like that. And the cut feed just boom, just like that. So thank you for watching. Like they don't want him in front of a camera, or for some reason, and he hasn't addressed it to anybody yet.
Yes, I do have a lot of thoughts and conspiracy thoughts on that, but that doesn't.
Back to China aspect. Like, do you think the U.S. could do anything?
No, because again, they're not. The U.S. is not thinking strategically. The U.S. is thinking, always fighting with itself, always fighting. One governor with another. These governors, they're all after the White House. They're all after that next position. Nobody's thinking 5 years, 10 years. Well, in reality, in politics, you should be thinking 20, 30 years ahead. Nobody's thinking that. Yeah. They're thinking the next 6 months, the next 1 year. China is. You understand? And we keep just making our country, we're making it weaker. We're printing all this money, and none of that money is going to infrastructure. None of that money is going to producing and creating things that actually make money for us.
Yeah.
Making the U.S. actually generate revenue in a significant way. We're not investing in, new technology that could revamp the world. We're not doing any of that.
Yeah.
All we're doing is fighting with each other, fighting with other countries. And again, going back to what I was saying is where I thought Trump was doing a few good things, he's also the same thing, just thinking about right now.
Well,
very
he was
egocentric.
exactly that, though.
And it was something that was just more about right now, not thinking strategically, not being smart about what makes sense for the country. Nobody's thinking about that. And China is.
Oh, Emma, you look at the different types of governance. Is like they have the what's the name of their government? It's the Communist Party of Republic of China or something like that.
Yeah.
They run a quasi capitalism,
Communism
kind of state,
Yeah.
to where it's like the government's whatever the government says the government does. Like they don't really have quote unquote elections like they do here, where somebody can be in power and stay in power for a long period of time. To where you look at those two types of governing bodies, like I think that party right now is winning, because you have our issue with democracy, the people get voted in, and you get it such a divided country the way it's gone. And I'm curious, because I wasn't old enough to see, like, and if people understand, like, comment below, like, what was it like in the 1990s and 1980s? Was it like that, to where one president came in, the other one reversed it, they flip-flopped like they did? Because I only know from 2008 to 2021. I just have seen 3 administrations, but that's exactly what happened. Did Obama come in and reverse Bush's? Did Bush's reverse Clinton's?
Well, and then you also have, you have two factors. One is the world is moving a lot faster than it was in the 90s.
Yeah.
Right? So when you're talking about one president coming in and changing what the last one did, it's not. Back then, it wasn't moving as quickly and changing as drastically as it is right now.
You also don't have the media companies of instant speed that people can voice their opinions.
Oh, 100%.
Back in the 90s, like that's
Facebook.
where, like, it's like that. I attribute a lot of this division to the ability to people to voice their opinions online, and not people understand that
the repercussions.
Or not repercussions. Like, you arguing with somebody online is never going to change anybody's mind, but yet people do it all the time. And the way those things are, their profit models work, they need you to stay on there doing that stuff so they can pump more ads to you, so they give you the more things to stay on there to engage with. So that just divides people
further. That's no different than the way the media works. The difference is that the media is doing it for you.
Yes, but the media was like, you had to choose to tune into that. It wasn't as ingrained as it was in your pocket in a simple tweet as it is like in the 90s. Like, yes, the media was doing that, but you had to choose to sit down and watch TV. You couldn't watch TV at work in 3 seconds. No. You can get online, check something, make a post in 3 seconds, 10 seconds, and get that division.
We also haven't, I think, again, the world is moving too quickly, and people have not, our way of processing and educating our kids has not evolved all that much to show them how to manage all of this news and all of this thing that's coming in so quickly, because the parents don't know how to manage it.
Oh, because it's so new. Like, it hasn't adjusted.
So you have all of this coming in that it is very new for people. It's moving very quickly, and people just don't know how to adjust. A lot of people, it's just that knee-jerk reaction when they do anything. There's no real thought process to any of it. They don't go deep into anything. It's just a quick reaction, quick headline, and let's move on. And if you have your friends that agree with you, then you must be right. You know what I mean? If you have your friends that give you a thumbs up on Facebook, then you must be right. So you have all of this, and you have no real, like, I think another issue that we have is the executive orders. Like, I don't think executive orders should work as easy as they do that. You can come in and do, I don't know, how many did he do? Like 40 something executive orders, like the first day or some shit, like some
in the first couple months.
I think
he's done like the second most, equivalent to like FDR.
Yeah.
During the Great.
Well, those are the things that I think are not good, where it's like, look, if you're going to undo something that was supposedly done as a 10, 20-year project for the U.S., you can't just do an executive order and undo it. Like, there needs to be some actual thought process behind it. Maybe if it's not working, how do we modify it? Right? So the same thing, like Obama tried to redo the healthcare industry, right? So he tried to redo it. Trump comes in, cancels Obamacare. It's like, hold on. Not everything about Obamacare was terrible, right? So
he didn't cancel Obamacare. He just removed the tax mandate.
Well, the tax, he was trying to revamp the whole thing again.
Yeah, he was.
And do his own thing.
Didn't work, but yeah.
Okay. So he's trying to do all this, undo everything Obama did, because it was Obama that did it. It's like, why not just, instead of doing that, why not look at the system, what's not working, and let's tweak it, right? Then the next president comes in. Okay, this is what's not working. Let's tweak it. Can we put the country first?
Yeah.
Before we put our political views first.
And going back to it, like how it started this conversation was China, and I have an article in here that says too much stimulus in the U.S. may bring imported inflation to China, economists warn. So this is something that China, it's obvious they don't want to be stuck on the dollar system. They don't want, they want to become the reserve currency of the world, and they're trying to make their economy the biggest. And my point is, like, I don't think the US could stop China, and I agree with you, unless they do something drastically changing, just for the fact that they have almost like 1 billion more people than we do. I think their population is either 1.1, 1.2 billion, and we're 300 million. So they have way more people to create a middle class out of, like we did after World War II, to bring US to the standard. But as the U.S. pumps trillions of dollars into the economy in the wake of the coronavirus pandemic, economists are concerned about spillover effects in China, including the risk of importing inflation. So they're basically saying by importing inflation that there's going to be inflation in the United States, and they're going to import it to the United States via their holdings. So the U.S. Congress is reviewing a $1.9 trillion stimulus package that critics say could cause inflations to soar and add debt levels that rose following last year's historic $2 trillion stimulus package. This is a quote from the former finance minister of China. The large-scale issuance of U.S. treasuries and the rapid expansion of the Federal Reserve's balance sheet have increased the spillover effect of U.S. macro policies. The U.S. and Europe have pursued extraordinary monetary policies in the last 2 years, said Zhang Chen, director of credit at Bluestone Asset Management, referring to historically low interest rates and other policies to support economic growth. That caused a rise in commodity prices and pressures from imported inflation into China. And the issue with this is China, the country, is the world's second largest holder of U.S. treasuries and has $3.2 trillion in foreign exchange reserve, mostly denominated in U.S. dollars. And they say, as a recommendation, as for the near-term inflation concerns, analysts are watching the surge in prices for many commodities, in which China is the world's largest consumer. Last month, copper prices rose to the highest level since 2011. These price increases would raise product costs in China. And they're saying when moving towards tighter policy, Chinese monetary policy will need to consider external risks, such as the potential of imported inflation and the long-run depreciation of the U.S. dollar as a result of stimulus in the United States. So they're watching this. They're seeing all this money come in, all of the depreciation they're doing when they have the second largest holding of these things, to where they're pumping this debt in the market. Somebody needs to be buying this stuff.
Right.
If the Federal Reserve can theoretically buy it all forever, but what problems is that going to be in a globalistic society, that world that we have? You can't have that happen to where the world is going to constantly absorb that stuff. So you have China watching this. They want to be the top dog. They're after the United States, who's been there for a 70-year run, basically since after World War II. So that's my concern, and that is obviously other people's concern with these stimulus packages, the way they're doing this, and people are watching out for what the U.S. is going to do and these assets of, like, the U.S. Treasury bills backed by the U.S. government. Do you have any thoughts on that?
I mean,
it's a lot.
Well, no, it's not just a lot, but it's the same stuff that we were talking about. It's China also has an issue. Yes, they have a lot more people than we do. That's true. But you still have to work together, right? Because even a small country with less people working together is a lot more powerful than a divided large country, right? So, and that's what China does, or at least that's what they put out they do. Nobody knows what the hell China actually does, because, you know, they don't actually share. They share whatever they want you to know, which is, again, very strategic, right? You only hear about China what they want you to hear about China.
Yeah.
Where in the U.S., you get all of our dirty laundry out there.
Yeah.
You understand? So they can prepare.
Thanks, Facebook.
Yeah. No, even the news. The same president. They're not strategic at all when they fucking just blur out everything. So you have all of this. They don't have any real plan, I don't know. I don't feel that China has much of a competition with the U.S. We're becoming soft as a country, where nowadays, like, this whole, what do they call it? The cancel culture. God forbid,
getting ridiculous.
You say an opinion. God forbid you tell a joke. If somebody is too sensitive, now you're screwed. People are getting fired from movies, TV shows, everything from just making opinion
of being who they are,
whatever it is, right? Like, you're no longer safe to do anything. You're no longer safe to say anything, to state your opinion. So it's becoming a very soft culture where now you got to be careful what you say. You got to be careful who you offend. You got to be careful where you go. It gets to a point where everybody's like walking on eggshells.
Yeah.
So you make a country very very soft like that. You know what I mean? Like, I grew up in construction. I grew up well, and also being in New York and everything. Like I didn't grow up around stuff like that. And now, like I talk to somebody that way, and you can tell in their face how offended they are and how hurt they are. That I'm telling them, hey, maybe you should actually put in some work.
Yeah.
What? You're telling me to work? What did I say wrong? You know
Yeah.
what I mean? Oh, it's the tone of voice. Holy crap, the tone of voice? Really? You're that sensitive? You know what I mean? So you go through all that. It's like, what advantage do we have? I don't know. Innovation, we're selling it to China. Anything that we innovate, we give it to them.
Yeah.
Like, what? What is it that we have that
The only
can
thing that
compete?
I hope is they are just controlling the media, the narrative, letting us see what they want to see to get eyeballs to get reelected, but behind the scenes are actually doing something.
Yeah.
The faith that like that's what they, I can't remember the name of it. Back to like high school, college, when they're saying you have two types of people. Like you believe in the power of the people, or you think people are inherently good, or you think they're inherently bad. They're flawed from the beginning, or they actually are good people. And like I try to lean more towards like I think people are naturally good and they will do the right thing on the majority, not everybody.
Yeah.
And I'm hoping that in our political system, all the hundreds of people that are employed at the top level and everybody underneath, like they're doing the right thing behind the scenes, not what's just being put out into the media.
Yeah.
Like I'm hoping that's what happens, but it goes back to Buffett's thing of like never bet against America, because we still do have a capitalistic society that can move independently from the government to a more of extent than China can. So
Well, but that's the key, right? Capitalistic society, like that's what we're moving away from.
yeah,
We're moving away from capitalism. We're moving away from, what the free market is, how the free market can actually protect us against all this. We're moving away from that because this is the good and the bad about free markets, right? Is that the free market, while it can do a lot of good, it sometimes does bad because it overcorrects.
yeah,
Right? The difference is the free market can overcorrect a lot faster than the government can.
Yeah.
So let's say the free market realizes it did something bad. It'll correct very quickly.
Yeah.
The government did something bad. It might still take years
decades
for them to
longer
correct.
yeah,
Exactly. So that's but then that's the problem is like the government's like, no. We can't have any bad. You know what I mean? Because it hurts people's feelings. People get sad. We don't want people to be sad. Facebook, what's their new policy now? We don't want news. We don't want anything. We want entertainment and happy things. I'm like, entertainment and happy things. Like, what the hell are you saying? You know what I mean? Like, I'm sorry. The world is not all unicorns and rainbows. You know what I'm saying? Obviously, like you have that wish that you asking Santa for this Christmas that the government is doing something good. So, whatever. Everybody has their belief systems.
well,
But you know what I mean? Like, that's not life. Life
it's also
is
like-
ugly.
and
We
you-
got to
you
be
s-
willing to deal with
And
that.
to add to that point, I have an article in here titled Chipotle will link executive compensation to environmental and diversity goals. And that article alone was like, all right, I'm curious where they go with this. So starting this year, 10% of Chipotle's executive annual incentives will be tied to their progress towards achieving company goals. And some of those goals are the company plans to publish its carbon footprint, including all indirect emissions along its value chain by the end of the year, faster than its prior expected publication date of 2025. The company will announce new sustainable goals stemming from those learnings when the report is released. Okay, I'm fine with that. Chipotle is also seeking to maintain racial and gender pay equality and promote more women and people of color above the restaurant level, meaning into the management of Chipotle. It has created a training academy with online courses that teach a wide range of skills from the conflict resolution to setting goals with the aim of helping employees of all backgrounds climb the corporate ladder. I'm fine with all that, and it's cool. I agree. More women, more diversity, everything. It's when I'm worried that they're going to focus too much on that, and they hurt talent pools. That you look at the women in the workforce, the diversity of the population between different races and stuff like that. I think Patrick Bet-David talked about this, that somebody said that they were only going to hire a certain percentage of African Americans. He's like, but when you look at the talent pool, there was only 10% of that talent pool was that subset that they were targeting that they wanted to put 50% above, to where you are eliminating all the talent of people that are capable of doing the job. I believe if you're capable of doing the job, it shouldn't matter race, color, sex, anything. If you're capable of doing it, you should get the job. So I'm all for them creating these incentives to letting people help them climb the corporate ladder. But when they focus on it too much, it's to your point that so many organizations can hurt themselves in the long term because they eliminate the most capable people doing the job because they're only focusing on diversity.
Well, and we talk about overcorrection, right? You are now overcorrecting racism and discrimination and diversity. You're overcorrecting. Where you want to eliminate all that, just make it equal. Period.
Equal.
Not overcorrect. Make it equal. Where the best person gets the job. Period.
Yeah.
Whoever that is. Now, do we have an issue of lack of education towards minorities and stuff like that to make them qualify for these positions? Okay, I agree with that.
Yeah, 100%.
Educate them better.
Yeah, and that's
offer the education. But now, changing the policies to say, no, we're only going to do this, you are hurting yourself, because if you're bringing on more minorities just because it's politically correct or it looks great on Facebook, but they're not the right people, your business is going to suffer.
Yeah.
You understand? Now you're overpaying somebody that doesn't have the talent to be there, that doesn't have the skill set to be there. So you're hurting yourself. You're doing a disservice to them, because now you're paying somebody, you're making them think they're worth something that they're really not, just because of their skin color or their
background, their race,
whatever it is, right? So it's like, to me, you're going racist in a different direction, or you're discriminating in a whole different direction now.
Because I mean, if you get that on a mass scale, and you get all these corporate executives, like, that's where I said it could hurt the nation moving forward.
Yeah.
But you also you don't hire that person that has the capability. What are they going to do? If they're not happy and they know they're worth more, they can go start their own business. Yeah. So that's kind of that pendulum swing of things that, like, where I believe in capitalism. We're both capitalists. We own our own business. That it's like, if they don't get the job, they're going to go create a company and replace what they couldn't, or these other big companies are doing. So over time, as long as the government and the big organizations don't suppress them and create these monopolistic monopolies, policies, kind of I'm looking for monopolistic policies, then you're going to have other companies rise up and move quicker.
Right.
So it is something. So as long as long-term policies and laws don't get put in place that hinder people from being able to start a business, making it harder for them to start a business, over-regulate, then over the long term, don't bet against America.
I think it's like I said, everybody is just going to the other extreme now. Is there racism? Yes, there is. And there's always going to be some level of racism. If it's not towards black, it's going to be towards Hispanics. It's going to be towards Asians. It's always something. There's always going to be something. There's always going to be work to be done, right? And is there discrimination? Yes. And there's always going to be discrimination. Now, what I'm saying is that if you want those things to end, you don't overcorrect. Newsom, when we talked about the stimulus that they're releasing in California last week, we talked about it, and Newsom said how $2 billion is going to be allocated to small businesses with a main focus in minority-owned businesses. To me, I'm like, that's okay. So then, if you're not a minority but you're struggling, you're not going to get any help.
Tough cookie.
To me, it's like, what good is that? It just makes you look good as a politician. That's all you care about.
Yeah.
But if you want to eliminate it, you need to just be equal.
Yep.
You understand? A black person, a Hispanic person, a white person needs to be treated the same regardless of where they go, what they do. They need to be treated the same. If you need help, you get help regardless of what you look like. If you're the best person for the job, you're the best person for the job, regardless of who you are. You understand? That's how you eliminate it. You make it equal. You don't go to me as a Hispanic, even though I'm white, so I haven't suffered direct racism, but as an immigrant, I've suffered discrimination because I couldn't work. I couldn't do a lot of things as an immigrant. I couldn't even get a driver's license. But as that person, I feel disrespected and belittled that now it's like, oh, come here, you little minority. Here, have this. Oh, you're a minority. Here, have this. No, let me earn it. Yeah. I'm not asking for a handout. I'm just asking for a fair chance. right? But now we're not given a fair chance. We're doing handouts. And I think that's dangerous. I don't agree with it. I don't like it. It doesn't support anything.
So,
But
well,
I do need to go see a house. So I did want to touch on what we said we were going to touch on. Is Texas overvalued? Should we not be, should investors go look for somewhere else? I was asked this question this week by an investor. He was like, hey, you guys are investing in Texas. You seem to be doing a lot, very well. What are you seeing? Is it too late? What do I do? So you actually have an article.
Well, I got two. So I'll start with the one of the Texas earns national recognition for most capital improvements for 9th year in a row. So this ties into real estate of the money flowing here. So this was done by the Business Journal. It's like for the 9th consecutive year, the Lone Star State led the United States for capital investment in 2020. So when you talk about is real estate overvalued, are you telling me the entire United States believes that Texas is so overvalued that nobody sees it, that we're the 9th consecutive year winning of the most capital investment? On March 1st, Site Selection Magazine awarded Texas the 2020 Governor's Cup for having the most economic development project last year. The state had roughly 781 projects underway in 2020. Texas project count ranked far ahead of number 2, Ohio, with 419, so almost double the number of projects that are going on. And Ohio was also awarded a 2020 Governor's Cup for having the most projects per capita. Texas came in 6th for number of projects per capita. Okay, Texas wasn't number 1 on the number of per capita, because I agree. It's like, okay, the number of people here should reflect that. But still, Texas is a huge state. There's a lot of people here. And we're only number 6 as far as per capita, and we're also the largest number of product. That's fantastic to see. So now heading over to the 3 reasons we're definitely not in a housing bubble. Keeping current matters. So this was actually sent to us by a friend of ours, Lawrence Rotowski, and actually sent us a good article for once. So
very surprising.
So it goes 3 reasons. Like home values appreciation by about 10% in 2020, and they're forecasted to appreciate by another 5% this year. This has some voicing concerns that we may be in another housing bubble like the one we experienced a little over a decade ago. So first point, 1, this time housing supply is extremely limited. The price of any market item is determined by supply and demand. If supply is high and demand is low, prices normally decrease. If supply is low and demand is high, prices naturally increase. Between 2006 and 2008, the month supply of inventory increased from just 5 months to 11 months. The month supply was over 7 months in 27 of the 36 months, yet home values continue to rise. Months inventory has been under 5 months currently, months of inventory has been under 5 months for the last 3 years, under 4 months for 13 of the last 14 months, under 3 for the last 6 months, and currently stands at 1.9 months of inventory across all of the United States. So to that, I don't want to go read all this. So the first point, this time housing supply is extremely limited. Expand on that of why you think that is a good reason that we're definitely not in a housing bubble.
Well, it's precisely that. We have very limited inventory, and we're having more and more people come to Texas because of the job opportunities and, funny enough, because of the politics, right? Like it's business friendly, it's affordable. I mean, we have people moving here because how expensive it's gotten on either coast. It's gotten ridiculously expensive to live there. And, you're representing a buyer right now for a listing and everything, and they're able to sell their home over there and get a massive property here in the Dominion, in a very exclusive area and everything.
Cool, nice yard, nice size lot.
Everything
it's
that
beautiful.
they wouldn't be able to afford in California, right? So in California, that house will be owned by a celebrity or something. So you're looking at that affordability, you're looking at all that, and we are just getting started with all this.
Yeah.
The infrastructure that Texas has for growth is immense. The companies that have just started to relocate, the massive companies, and then that's not even counting all the smaller companies that have been relocating. Last I heard, what was it? Wells Fargo? No, not Wells Fargo. It was another bank. Damn it, I can't remember who it was. Goldman Sachs. It was one of them.
Charles Schwab.
No, I don't know, but
They moved here.
They were leasing like 800,000 square feet of space in Texas, relocating their headquarters and stuff like that. Like, I mean,
I don't know, like the NASDAQ trading company, platform, industry, like they were talking about
Yeah.
moving their platforms here because New York's trying to come out with taxing trades. And they're like, if you do that, we're gone. Like the New York Stock Exchange came out and said that. Texas, NASDAQ, they're like, you pass that crap, we're out. And that'd be a huge hit to places like New York.
100%. So you have all of that. You have low inventory, and you have so many of these policies, like the article that you just talked about before, of how, and now, you know, all of the things that Abbott is doing to try to open back up Texas and everything is just, I don't see that slowing down anytime soon. We're just getting started.
Oh, and there's some people that said this, like you see all the news being filled with, oh, Texas is, Biden called us Neanderthals
That was
this
hilarious.
week. But there's people who come out. There was a celebrity, I can't remember who it was, that said like the second that came out, no masks in Texas, I'm moving there today.
Yeah.
And just declared it right there.
Well,
It's like, I'm gone.
That's what I find hilarious. Even the reason why they're trying to get rid of Newsom and everything, they went too far.
Yep.
You understand? They've gone too far. New York, they're flooding to Florida.
So let me now the caveat, because I know a lot of people say this too, is, well, yeah, what are all these people not paying their mortgages? When all these foreclosures happens, it's going to crash the real estate market. How would you combat that
Here in
argument?
Texas?
No, just the nation. I mean, because this is a national aspect, and Texas is just being in real estate and here and doing the stuff that I do
Yeah.
with our market updates. I know we're right in there with that. I know there's some high, some low. We're a part of the low.
Well, that's the thing that you have is when you have such low inventory and you have so many people moving, are we going to have full foreclosures when, I would say if the moratoriums are ever over? Yes, we will. But I don't think it's going to be to a point like a 2008 kind of foreclosure or anything like that, because the equity spread these houses are having is insane.
There's some crazy stuff in this
The way
article about
these
equity
houses are
spreads.
appreciating. What was the research we used to do? We used to go driving for dollars, right? We would create a list, and they would scrub it through the county to see if any deed transfers were later than 10 years old, right?
Mhm.
Because we didn't want houses that were 10 years or newer of deed transfers that somebody might have bought it because there's no equity. We've gone down to like 5 years, if that, because the appreciation we have seen in these last 5 years has been nuts. So
the last 6 months were 10% year over year median sales price increases.
yeah, and the properties that we're holding, we're about to buy a package of deals, right? Of a bunch of properties. From the last time you ran comps to now, that package, has been going up. You understand? Like everything that we're doing is real estate, all of that. That's why I believe, like, kind of going back to the point that I made.
It's not guaranteed, but it's one of those things that, like,
no, and nothing's guaranteed, right? We don't know what tomorrow's gonna bring. We just had like a black swan event that that was completely unexpected with COVID, right?
Yeah.
So excluding the unforeseen, the move, especially all these massive companies relocating, all of these things, that's the first step. There's a tail that follows all of that. You understand? That hasn't hit Texas yet. So we have that long tail of all these companies, all these people moving here that hasn't hit Texas yet.
It's like, and one thing great for a real estate market is an influx of people.
100%.
You show that, like, and I'm curious when they release this census data from 2020, what has changed from 2010 to 2020 as far as population and migration and stuff like that. We can see it with the U-Haul reports that people are leaving the coasts, leaving the Northeast, leaving the West Coast, and they're going south and they're going in.
Well, so, and then you're also going to have, tourism is going to start picking up. People are desperate to travel. As much as everybody likes to be appalled by whatever, the mask mandates and all this, they go to other countries in a heartbeat and remove their masks as soon as they get there.
Yeah.
You understand? Like, people are desperate to go places. So Texas opening up, not mandating masks. Tourism is going to start picking up again.
That's fantastic for our hotel and hospitality industry.
So
here.
you have, and especially in San Antonio, like, we're going to have much more growth. We have a lot more growth to go. I mean, we haven't even begun to hit I think that even like the rise of the growth that we have in San Antonio. So yeah, I mean, I don't see Texas slowing down anytime soon.
Texas or the nation in that sense across the board.
Well, the nation, I think it's going to matter where you are, right?
Yeah.
Like if you go to New York, I think
but
New York
nationally, the housing market's also not going to crash because that also depends on our lending market. Depends on that. So if it crashes everywhere but Texas, like we're going to have some spillover because it's harder to get money and mortgages for that. So the second point, this time households have, this time compared to 2008 2008. This time, households have plenty of equity. Again, during the housing boom, it wasn't just purchasers who got caught up in the frenzy. Existing homeowners started using their homes like ATM machines. From 2005 through 2007, Americans pulled out a record $824 billion in equity. Today, the banks and the American people have shown they learned the valuable lesson from the housing crisis a little over a decade ago. Cash out refinance volume over the last 3 years was less than a third of what it was compared up to the 3 years leading up to the crash of 2008. ATOM Data Solutions just released their fourth quarter 2020 U.S. home equity report. If we combine the 38% of homes that are owned free and clear with the 18.7% of homes that have at least 50% equity, we realize that 56.7% of all homes in the country have a minimum of 50% equity. That's significantly better than the equity situation of 2008. So when we talk about the foreclosure aspect, all these foreclosures are going to come back. Just because they're in foreclosure doesn't mean that they don't have massive amount of equity. If they've owned their house for the past 3 years, probably they got room to get out, unless they've been like, they're demanding all this back interest. They get no forgiveness for all the interest, because when you stop paying your mortgage, that interest goes up so fast.
Oh, yeah.
Especially in the first couple of years. But to see that massive amount of equity sitting there in people's houses, that's fantastic to see, as far as like there's a housing bubble forming, housing's going to crash. So what do you...
No, I agree 100%. It's the same thing when people, I've been telling people consistently, because there's still people marketing the foreclosures. And I did a workshop this week, and also we have a workshop coming up on March 20th that we're doing for you to get started in wholesaling. But I did a workshop about cold calling and all that, and people were like, well, what about marketing to foreclosures because of short sales? Like, short sales are a very tedious process to go through, and people don't have the motivation to do it. People didn't have the motivation of going through it because the seller has to do a lot of the work on a short sale. They didn't have the motivation to do it back before when foreclosures were big. Now, when they know they're not being kicked out of their homes, they have no reason to. And then you add, because we've covered stats on this on the previous episodes, you're talking about, like, I think it was about 1%, 1 to 4% of the mortgages that are in forbearance are close to negative equity. Close to negative equity. That's it. The rest all have equity in them.
And there's only like 5% of federal mortgages are even in forbearance anyways.
Yeah.
So
like, you're looking at all this, and it's like most of the homes have a bunch of equity. Even if foreclosure comes, they can still list their home, sell it fast, take care of the mortgage, and walk away with money. You understand? So I don't see foreclosure being an issue.
I don't either. I don't see that being a reason that the market's going to tank.
No.
So the third point, this time housing demand is real. During the housing boom in the mid-2000s, without considering historic market trends, people got caught up in the frenzy and bought houses based on unrealistic beliefs that the housing value would continue to escalate. Basically, just making a bet on no fundamentals except for the fact that I can afford this mortgage, I can put no money down, and I can sell it in 6 months to a year for more money than I brought. They were buying it like a day trading housing and real estate and stocks with a massive amount of debt. Right. The mortgage industry fed into the craziness by making mortgage money available to just about anyone, as shown in the Mortgage Credit Availability Index, published by the Mortgage Bankers Association. The higher the index, the easier it is to get a mortgage. The lower the index, the more difficult it is to obtain one. Prior to the housing boom, the index stood just below 2,000. I'm sorry, I don't know where I got 2,000. Prior to the housing boom, the index stood just below 400 in 2006. In 2006, the index hit an all-time high of over 868. Again, just about anyone could get a mortgage. Today, the index stands at 122.5, which is well below even the pre-boom level. So basically, in leading up to the housing boom, you have like 400 to get a point. In the middle of the boom, they're saying it rose all the way to 868, and today it's down at 122, less than half than what it was before even the boom started in 2003, 4, 5, and 6. In the current real estate market, demand is real, not fabricated. Millennials, the largest generation in the country, have come of age to marry and have children, which are two major drivers for home ownership. So that is the third reason. What do you...
I
Say on
mean,
that.
I completely agree. I think one of the biggest rise that we're seeing is that we're seeing millennials. They're coming in. It's a large demographic that's coming in. They're finding themselves wealthier and wealthier now too. I mean, millennials have money. They have money saved up. You know, we saw that for a couple
They're getting more
years.
money.
Huh?
They're getting more money now.
Yeah, they're getting more money, and now what they keep pushing for to eliminate student loan debt and all of that, they're pushing to come up with a new credit system, right? Credit rating system that doesn't go on whether you got in, what was it? If you had a bankruptcy, if you got in foreclosure, like it doesn't look at those things. Like it's a credit system that they're man, something the government's coming up with where it's going to be a credit rating system.
Government, we're here to help.
Always. It's going to be a government rating system, credit system that's going to pretty much it's going to make it hard for you not to qualify for things.
Yeah.
So more debt, right? That's more debt, more loans, more everything. You have debt, you have things that you're not paying. Don't worry about it. Moral hazard gone out the window. We forgive your loans. We forgive your debt. We'll take care of this. We'll take care of that. So for Biden proposed that first-time homebuyer assistance as well, of like an extra $15,000. We talked about now they're coming back with adjustable rate mortgages to make it where people are pretty much going into a house not just with no money, but like they're giving them money to go into a house, and they're giving them an adjustable rate mortgage, which that was the biggest problem that we had in 2008.
Yeah.
Was adjustable rate mortgages. When they adjusted, they went from like 2% to 6%, and some were paying up to north of 12% interest.
Yeah.
Like it was killing
they
them.
had those teaser rates.
Yeah, those teaser
Well,
rates
even
are,
people knew because like, oh, in 3 years they'll be able to sell this house for so much money. It doesn't even matter what the teaser rate is. But when everybody was doing that, it crashed everything.
yeah.
But now when they talk about the demand is real because the person that has no money, doesn't have a job, just has some cash, can afford that thing, can't get a mortgage anymore. I mean,
Yeah.
hell, as just a business owner, if you own more than 20% equity in a company, to say you're a business owner, your qualifications drastically change to be able to get a mortgage.
Yep.
As far as a federal 30-year fixed rate, you can go commercial loans, you can get other things that way, but as far as like those housing mortgages are cut off to a lot of people that could have gotten houses in 2004, 5, and 6. I think we had a friend of ours. He said, like, I bought a house in 2006. They financed 100% of the entire purchase. I put no money down on stated income alone.
Oh yeah.
And like, what do you mean stated income? Is like, I told them I made $100,000, which I didn't, and they asked for no verification and funded the purchase 100%. He's like, that's what they were doing in 2004, 5, 6, and leading up to the housing boom.
I have a closer example because it was my own brother. So this was back, I want to say,
He doesn't watch this, does he?
huh?
Like, you didn't watch this. It's your
Well,
older brother.
it's not a lie. This was back in 2002, 2003, I want to say, around there. So at that he was what, 23? Yeah, 23 years old. He was going to buy a house. He had everything ready to go. The only reason he didn't buy a house was because my dad told him he wasn't going to buy a house. Right? We do come from a family where if my dad says something, we did it. It doesn't matter how old you are. You know, it was just how it goes. But my brother, he's like, I don't understand. I qualify for this. My dad, he's like, you don't. Remember, you idiot. I sign your paychecks. I know how much you make. But the bank knows that too. He's like, well, the bank is wrong. He's like, it's just math. You can't afford this house. You understand? But they were willing to give a 23-year-old a $240,000 mortgage, I believe it was, when he was making like $500 a week. My dad, he's like, no, you can't afford this. And it was an adjustable rate mortgage and everything. That's why the first,
What year was this?
2003?
Oh, so you would have been screwed.
Oh, royally. Well, sort of, because my parents bought during that time frame too, and up until the crash, houses appreciated like crazy in New York.
Oh yeah.
So
as
I mean,
long as you got out before 2007, you were fine.
And my parents got out before then, so they capitalized very nicely on like a few years of owning the house. But they were giving that to my brother. You know what I mean? A 22-year-old kid, 23-year-old kid that makes $500 a week, a $240,000 mortgage. It was like, if it wasn't for my dad, he would have bought the house.
Yeah.
You understand? It's like, no. And it seems like we're getting back to that. And you were telling me, right, with your friend or somebody from California was telling you how they're giving them a loan What was the loan that they were getting like over ask?
Yeah, or they're saying like, because the agent asked like, how does it qualify? He was asking the mortgage broker, and they went in this elaborate way of saying, oh, well, this is how they're able to do it, and it was something like that. I didn't dig into it, but they said like the house, because he's like, they were asking for way over what they asked for the house
Yeah.
to try to get in the door to say we're paying you more money to accept our offer, and like the agent
They
reaches
were
like,
offering way more than they were asking for the house.
yeah, so they
Okay.
so they put their price for a certain price, and this person came in to beat, because they're super
Yeah,
competitive
yeah.
in Southern California, to where like they were way up here, and they're like, I get you want to pay that, but you're getting a loan. The bank's not going to lend that, which is a disservice to my client, because I'm accepting this offer thinking they're going to make that money, but then the bank comes in and says, nope, we're only going to offer you this amount. But apparently they went into a way of saying, oh, but this is how we're able to do that. We do some tax things, we do some stuff here to move things around. So apparently out there they found a way, because back in 2006, 7, and 8, Kiyosaki talked about it. He's like, they were lending like 120% against people's houses.
Oh, 100. Yeah.
So they'd fund like 100%, and then they take out a second loan for the other 20% to get up to like what the over ask the price to get it. He's like, that's when I knew a bubble was forming, and they sold everything in California and moved it to Texas prior to everything like crashing and stuff, or being ready to take advantage when things dipped. That's what they talked about. And it's like, so we're getting back into that, but a different way. It's not like, oh, it's not the same thing, but it rhymes, doesn't it? It's like the net end result is the same, and that's where some of you get those places out there. That's why the West Coasts are, and like the Northeast, like they're boom busts. They go up super fast, but they come down even harder.
Yeah.
And because they don't have the stability, because that's just the way people think. That's the way the business are set up. And when you have that across entire regions, everyone figures out ways to get that piece done at some point.
No, it's what we talk about. They keep adjusting, they keep modifying everything, changing everything so it works to what they want it to work to. And one of the things I was talking about earlier was just the FHFA, how they extend forbearances again. So now they're allowing up to, they went from 12 months to 15 months. Now they're going to 18 months of coverage. And according to them, eligibility for extension is limited to borrowers who are on COVID-19 forbearance plans as of February 28, 2021. So if you applied for forbearance by February 28 of this year, you are essentially good to go for 18 months from now. So they were saying...
it wasn't 18 months from the beginning. It was
no,
18 months
from whenever you go into forbearance. So because you get the 12 months and then the other extensions.
Forbearance, got you.
So the FHFA said other limits may apply to the extensions, but did not provide further details. Of course not, because they're coming up with this as they go. With the new extension set in motion, some borrowers may now be in forbearance through August 31, 2022. In forbearance. So when you're talking about foreclosures, short sales, all this nonsense, guys, look, that... shift your strategy.
Whatever pain's going to be there, they're spreading it out. They learned their lessons from 2008 of what happens when you just dump all that inventory.
Spreading it out, they're eliminating it. I mean, it's getting to a point where it's like, I believe, here's my thing. Here's my point, right? You want to do this. You want to help out people. You want to do all this. I'm 100% for it, because you cost this. And in the sense that you shut down the economy, you shut down everything, and you say, hey, go pay your bills. Okay, right? So I agree. You got to help them out. But what you have to do, though, is there has to be a check and balance. You cannot be given all this stimulus, all these things, all these forgiveness, and people are not even making an attempt because they don't need to. You know what I mean? That's where I think it's the dangerous part, where it's like, look, you're going to get stimulus, you're going to get this, right? But you need to show that you're making an attempt to pay your mortgage. You need to show that you're making an attempt to get a job, to learn a skill, to do something with your life, and not just sit at home not doing shit. I know, but that's what I'm saying. Like,
so my point to what I said, like they're spreading out the pain. So if you ended all the forbearances at once, and you had everybody foreclosed on at once, now they're spreading it out over 18 months to where if now somebody has a longer time to try to recover, has more time to do a refinance, has more time to do a loan modification over that time. So now say somebody entered in March. So now they only have until August of this year and their forbearance program ends.
Yeah.
But now it's depending on when people entered the program. So it's spread out over basically August of this year to August of next year that people have opportunities to either sell their properties or to get a job and make up or rectify the loans. So that's why I mean, like, they're spreading out the pain. They're not, yes, I see your point when they're saying they're eliminating it, but they said I think they're also spreading it out for the fact that you can't dump all that inventory on market without causing huge pains in making a death spiral all the way down. So now they're spreading out over time. So those people are still hurt, or they're able to have more opportunity to rectify the situation, but they don't want the market to crash, because that's their way out. Is they didn't let everybody in at once like they did in 2007 and 8. So they dumped all the inventory, and that just made it even a worse problem as it spread throughout the market. Now it's spread out to where as long as they can keep the housing market up, they can keep the stock market up, they can keep things floating by, it's going to be little by little, those pieces hit the market, so it doesn't create a domino effect that crashes everything. That's why I say they're kind of spreading it out.
And also, I mean, I get what you're saying, and I agree. Again, I'm not saying I disagree with the forbearance or with helping people out. What I'm saying is that it's the same thing when they do the tax cuts for the rich and all these things. The incentive needs to be that you're going to get this as long as you do this. You know what I mean? Like, you're going to get the forbearances, you're going to get all this, but you still need to show that you're making an attempt to pay your mortgage. You still need to show that you're making an attempt to bounce back, that you're doing something that where you're not just taking this and just not doing anything with it. Because what's going to happen is that the end of these forbearances are going to be over, and now the banks are going to be doing loan modifications and everything. I mean, on billions of dollars of mortgages, because it's going to be such a shit show with everybody like, all right, well, we haven't been paying for like 2 years now.
Well, that's what Brian Paulin just made a comment, like, when in forbearance, who pays the taxes and insurance?
Nobody.
Well, the bank does, because they're not going to let insurance lapse on their houses, because like they want the insurance company to be covered. And we've seen like that's how they get so far behind, is like the bank takes care of tax and insurance just for a while, and depending on who the bank is. But that's like,
yeah, that's but where does the bank get taken care of? By the government. The banks get taken. So there again, we go back to like, we're creating no moral hazard anymore. We're creating this habit. I'm just curious what this is all gonna look like when it's all over. What does that bounce back look like? Do people go back to doing things the smart way, or is this the new standard of like?
Well, that's what we talked about previously in these podcasts. They're enforcing risk. They're forcing you to take the zones. Like, what the fiscally conservative thing to do is not do that. But when all your competitors do it, you go out of business, because you have to do it. So it's one of the things like Buffett says, like, you can't invest in bonds. You can't do short-term things. Cash is trash. Like, you have to get that to work. You have to get capital to work to essentially reinvent the financial system. Not reinvent.
So why is he doing stock buybacks?
Because he believes in his companies and his.
But what's he doing with all that cash that his company has now? So he's buying shares back. Like, what's happening with all that money? Like, I mean, why not use that money to invest it instead of buying stocks
because he has
back?
So much money, and he believes in the business he has, that it's like his best investment right now is investing back into his own company, because he believes in his holdings.
There's no other investment out there but his own company. Like, that's crazy.
Because he doesn't, like, he's on the, like, they're saying he's looking to make an acquisition, but he's not finding anything that he wants. I mean, the guy's also 90 years old too.
Well,
and he's
90, but he does have people that are ready to succeed him, that they've been at his hip for the last 20, 30 years learning his ways, right? So, I mean, he's not surrounded by idiots. They're doing the numbers. But one thing that I see is, like, I had a conversation with an investor out of, I want to say North Dakota, he said. So, like, I never met anybody from out there.
Up there.
He says over here, the country does bad, we're at 3% growth. The country does good, we're at 3% growth. The country does nothing, we're at 3% growth. Yeah. He's like, this economy just does not move in any direction.
Kind of like San Antonio in the Texas market, where like we never boom as high, but we never drop as low as the other markets.
We're booming now. But one of the things that he said is that his dream was to build, or is to build like $1 billion company with the strategy that he's implementing and all this. And then he realized that there are companies out there doing what he's doing, and they're worth a lot more than he is and everything. He's like, yeah, I think that dream is out the window. I was like, well, that's the thing though. You're thinking of building $1 billion company because you're gonna build a great company. He's like, yeah. I was like, no, that's not how it goes anymore. You build $1 billion company by raising $1 billion. Like all it is now, the way I look at it is these are all Ponzi scheme companies. It's just like we talk about Open Door. All they're doing is making sure the next round of funds is bigger than the last round of funds they raise. And they just keep raising the next, and they keep raising the next, and keep raising the next. And because you look at their business model, and it's like you're losing money. Your business model loses money. It doesn't generate any income. Yet you're worth more and more because you keep raising more and more money. I'm like, you gotta, if you want a $1 billion company, get really good at raising money where you become so big that they can't let you fall. Because then a lot of investors are going to get wiped out. So then they all drinking the Kool-Aid. It's a freaking Ponzi scheme. That's all these companies are. You know what I mean? I was like, so if you want to become $1 billion company, go learn from Madoff.
Speaking on that, we're coming towards the end of the 2 hours and stuff like that.
And we thought this one was going to be short.
So speaking of raising money and just being worth more and more and more, Elon Musk, SpaceX raised $850 million, jumping valuation to about $74 billion. So SpaceX, we had this conversation today about it. You're like, how is it worth that much and everything? It's like SpaceX is still a privately held company,
right,
not publicly traded. So it's just its value is determined on how much money it can raise and at what share price it sells it at, and times the number of shares outstanding. That's what it's worth. So for you all that don't know, SpaceX is his rocket ship company and his ambition to connect the world. So SpaceX completed an equity funding round of $850 million last week. People familiar with the financing told CNBC, sending the company's valuation to $74 billion. SpaceX's latest funding round represents a jump of about 60% in the company's valuation from its previous round in August. So from August of 2019 to this year, when SpaceX raised near $2 billion at $46 billion valuation. So just in a year, it's jumped 60%, or less than a year. I'm talking 6 months. Starlink is its ambitious project. Now, this is actually kind of cool. So, I mean, Elon does some cool stuff. But it's just like betting on that is like, dude, go ahead. I don't know. But that's the riskiest of the risk bet that you could throw money at to see if it works out. So Starlink is its ambitious project to build an interconnected internet network with thousands of satellites, known in the space industry as a constellation. Building a constellation of satellites around the world, designed to deliver high-speed internet to consumers anywhere on the planet. SpaceX leadership has previously estimated Starlink will cost about $10 billion or more to build, but believes that the network could bring in as much as $30 billion a year, or more than 10 times the annual revenue of its existing rocket ship business. The company disclosed to the Federal Communications, the FCC, filing last week that Starlink has over 10,000 users in the United States and abroad in just over 3 months since the public beta began. Customers in the US, Canada, and UK, the company recently widened the scope of the public beta, allowing prospective users to pre-order Starlink service for $99. Pre-order messages tell users that SpaceX is targeting coverage in your area in mid to late 2021, with pre-orders, say, 2022. So I think that the Starlink, I think it's a cool name, like Starlink.
Oh,
like 10,000 satellites, a constellation around the world. You can get high-speed internet anywhere at any time. But it just shows like,
well, that was the whole thought of 5G. 5G is to be able to provide internet literally to anywhere, and you can do it just by having light posts throughout. Like they can bounce the signal off of a lot of things. Like 5G is to essentially connect the most rural area with internet that's instantaneous.
Sub-Saharan Africa,
anywhere,
like anywhere.
I wasn't even going that far. I was just going to Texas. Like go to West Texas. It's like you get no fucking service. But you go,
going to HEB off of Broadway, get the back of the store, and it's
go
like
to the back of the store.
There's
no
service
service
in HEB.
So those things are happening, and I like Elon Musk. He pushes the envelope for sure with a lot of areas. I think he has a lot of fun with the market with people. He loves tweeting something and seeing all the idiots follow them.
The valuation that he raised the money at, you know what it was per share? $419.99.
$419.99.
Penny under the 420 like aspect that he got in trouble for. It's like he has fun with what he does.
100%.
Like, to the extent that it's like people are like, yeah, I'm cool with it, because most of you weren't Elon Musk. You're like, come on, why am I going to give you money if you have a sense of humor with raising my money? Like, no, I'm not going to do that. But like for $19.99,
Because
that's just funny. Here's my money.
We go back to it. People are not investing because it's smart. They're investing because it's cool.
Yeah.
You know, so those are the things that I think is getting very dangerous. But
there was something that one of the Bet David podcast, they had somebody on there that said the American dream used to be owning a home.
Yeah.
She was an immigrant that came over here and said the American dream was to be able to be an American and own a house in America. It's like anymore that narrative is not true. It's like you want to be an American and be able to invest in America. It's to be an American investor. It's like that's the cool thing now to be. Instead of a homeowner, it's like I want to be an investor, because you look at what's happening with Robinhood, the GameStop. Like people are taking their stimulus checks that are supposed to be used for basic necessities, and they want to be an investor, and the barrier of entries have been eliminated. Yeah. So like they want to feel like they're investors and be an investor.
Well, that's what it is. We analyze trends and we see what's coming. So hopefully you guys have been getting some great value out of this. If you have, make sure you hit that like button and tell your friends about it. But that is it for today. We are wrapping up. We had a great episode, a lot of good things. Again, if you're curious about whether it's smart to invest in Texas, yes, it is. Texas still has a long ways to go. So I hope you guys have been enjoying this and continue to enjoy. We'll be back every Friday, 8 a.m., bringing you the best trends, tips, headlines that are going to affect you and your business and your investing. So with that being said, thank you for